Hello students, I hope you all are in good health. So today we're going to learn the topic discount. Well, discount we can say is when we have got reduction made from the regular or the list price, like 1000 rupees discount 10%, so that less 10% is the reduction that is made from the list price or the regular price of the product. Discounts is of two types: trade discount and cash discount. Well, we need to learn some theory and some practical work about the trade discount and cash discount, because while doing the journal entries differ. With the question trade discount we have different journal entry, and with the question cash discount we have a different journal entry. But before we learn more better how to do the journal with trade discount and cash discount, let us learn something about these trade discount. This discount is allowed by wholesalers or manufacturers to the retailers at a fixed percentage on the listed price of goods. So the trade discount is usually allowed or given by the wholesalers or the manufacturers to the retailers, and this is given on the listed price or on the catalog price. Now, it is allowed when goods are purchased in bulk, that is large quantity. So when the retailers, when they purchase in bulk, which means not just one packet of some commodity or some product, but in bulk, maybe in large quantity, like maybe 100 units or 200 units. So it is allowed, this kind of trade discount is allowed on the list price of the goods only when the retailers they buy the goods in large quantity. This discount is allowed both on credit as well as cash transactions, since it is related to purchase and not to payment. So trade discount is given as a first hand discount, we can say, because this is nothing to do with a prompt or quick payment. It has only to do with purchase. So even though the retailer are purchasing on credit or as cash transaction, they will be offered a trade discount on the purchase of bulk quantity on the list price of the goods. No separate entry is passed for trade discount, as it is deducted from cash memo or invoice of the goods. So when the wholesaler or manufacturer, when they are selling their goods to the retailers in larger quantity, they give a trade discount, and this trade discount is directly deducted from the cash memo or from the list of the invoiced goods, and so there will be no separate entry for the trade discount, which we will see how the journal is been. For example, journal in books of Anand. Sold goods to Gopal of the list price rupees 10,000 at 20% trade discount. So let us say that we are making journal in the book of Anand, and so Anand is a trader who is selling goods to Gopal of list price 10,000 at 20% trade discount. Now, as we said that this trade discount is directly deducted from the cash memo, so we don't show in the journal as separate entry. So let us see. If it is done in cash, then we will write down the entry will be cash account debit 8,000 to sales account 8,000. Since we are making this journal in the books of Anand, and we are selling to Gopal in cash, so we will not write Gopal here. So Anand is receiving cash and 2 sales, and if you notice here what we have done, we have directly written 8,000 after deducting 20% from 10,000. Similarly, on credit, Gopal debit to sales account 8,000. Since we are doing this on credit, we are Gopal becomes the receiver here for the goods, and so we know what is the entry for the credit sale. The name of the person to whom the goods will go, receiver will be debit, and then to sales. So here in both the cases, what we have done, we have directly deducted 20% from 10,000. We are not showing any separate entry of that deduction 2,000 because it is directly deducted from the cash memo or invoice of the goods. If goods sold at trade discount are returned by the customers, the amount of trade discount is again deducted from list price of the returned goods. Okay, so here now, since the manufacturer or the wholesaler has sold goods to the retailer on the trade discount, the return of the goods, the amount of trade discount is again deducted from the list price of the returned goods. For example, Gopal returned goods of list price 1,000 to Anand traders. Now, Gopal was the one to whom we sold, so Anand is getting back the goods. It is the sales return, and the goods that Gopal is returning is for 1,000. Journal in the books of Anand. Sales return account debit 800. To Gopal rupees 800. So here now, when sales was our income, so we had what we had done, we had done on the credit side 2 sales. Now when the sales return is coming, goods sold is coming back, so it will be debited, and the other name of sales return is return inward. Now here we have written 800 because what was the discount, trade discount? If you remember the previous question, it was 20%. So according to that, we are minusing 200 from 1,000, but here we are not showing separately the trade discount. Goods of list price of rupees 1,000 returned by Gopal, actual price less 20% trade discount. Enter the following in the journal of Gopal. Now with this example, we'll learn more better. Like we had done the journal in the books of Anand, who is a trader. Now we will do the journal in the books of Gopal, who is a purchaser. Purchase goods from Anand of list price 10,000 at 20% trade discount. Returned goods to Anand of list price rupees 1,000. Okay, so here we are doing from the both side. Anand, who was the trader, we made the journal in his account, in his book, and Gopal, who is a purchaser or a buyer, so we are making journal in the book of Gopal. So purchased from Anand. So purchases account is debited because it is expense. According to nominal account, we will debit to Anand. Anand becomes the giver. And here again we have 8,000, 8,000. Goods of list price rupees 10,000 purchased at 20% trade discount. Returned goods to Anand. Anand is becoming the receiver. To purchase return or return outward. If you would have noticed, then just in the video we had seen that in the books of Anand we had written sales return to Gopal, because for Anand it is becoming sales return. The goods are returning back to Anand, and who is returning? Gopal. But in this, since we are making for Gopal, Gopal is returning to Anand. So Anand is receiving. So according to personal account, Anand will be debited. And for Gopal, this purchase return will become income, because this purchase, when Gopal will return the goods, naturally the goods that he is returning, he will get 800 rupees back. So when purchase is debited, purchase return or return outward is credited. So from purchase, from Gopal, goods that he had purchased is giving back to Anand, or from him outward it is going, and to Anand he is bearing the expense because it is sales return for him, and it is return inward because for Anand the goods are coming back in. Goods of list price of rupees 1000 returned to Anand, actual price of 1000 less 20% trade discount. So I hope from the both side you understood, from the books of Anand concept and from the books of Gopal concept, the seller and the buyer concept. How are we going to enter the trade discount? There will be no separate entry that is shown, and whenever there is a return, the trade discount will always be deducted. Cash discount. This discount is allowed to the customer for making prompt or early payment. In other words, cash discount is allowed only if customer makes payment within a fixed period. So cash discount is given after the trade discount or after the goods are sold to the retailers. Now the wholesalers, they will give a fixed time period, that if you pay cash within this time period, say for within a week or within 15 days or within 2 months, you will get a facility of cash discount. So this kind of cash discount is allowed for encouraging the customers to make prompt and early payment. As the discount is allowed at the time of making payment, so the entry for cash discount is recorded only with the entry for payment. So here we will show a separate entry for discount, and this recording or this entry for payment is done only when cash discount is allowed, not early. Let us see, for example, paid cash to Anand traders rupees 7000 in full settlement. Now all the transactions are related to the question that I have already told you earlier in the earlier part of this video. So you will have to keep a note of that. Every time I am not typing the question. So here, according to that question, the goods list price was 10,000 minus 20%. So for 8,000 Anand had sold to Gopal, but here he is receiving 7,000. And if you are carefully watching the video, you will note that there was a return of rupees 800. So let us see what is the journal entry for the discount. So this journal entry is in the books of Gopal. Okay, so in the books of Gopal, it will be Anand 7200, to cash 7000, and to discount received 200. Okay, cash paid has been calculated as follows. Purchases was 8,000, less purchase return was 800, 1000 minus 200. So net amount that was due to Anand was 7200, and the settlement is done for 7000. So the discount received from him. So cash paid to Anand. So Gopal is receiving a trade discount. Anand becomes the receiver, debit. From Gopal, cash is going out, real asset, what goes out will be credit to cash, and then Gopal is receiving some discount. So this becomes his gain. As per the nominal account, gain has to be credited. So this is how we will do the journal entry whenever cash discount is been received or cash discount is been allowed. So this is from the side of books of Gopal. Received cash from Gopal under a cash discount of 5%. So here I have made a little change in the question. In the previous question, we had 200 rupees was discount. So Anand was supposed to get cash from Gopal in the previous question was 7,200 he was supposed to get, but he is getting 7,000. So the settlement was with 200 rupees as discount received, that was received by Gopal. So here just one new type of question I have put here. Instead of writing 7,000 settlement, we have written 5% cash discount. So from the question itself, we know that the amount that Gopal is supposed to give is 7,200, but he is getting a 5% cash discount. So here how we will calculate? Sales was 8,000, return 800, so amount due from Gopal was 7,200. Now this 7,200, the Gopal, which is who was supposed to give to Anand, Anand is now allowing a 5% cash discount. So 5% of 7,200 is 360. So after deducting this 360 from 7,200, we get 6,840. Okay. So students, this two different types of question is not to confuse you. It can be a settlement and then you have to calculate with minusing the due amount with the settlement and finding out how much is the discount, or the question can come that a percentage of cash discount will be given. So in this percentage of cash discount, you will have to find out from the amount due. Like here 7,200 is the amount due, so 7,200 into 5% is 360, what we have deducted from the due amount, and then we are getting the cash that is supposed to be received by Anand, that is 6,840. Now let us see the distinction between trade discount and cash discount. The meaning of trade discount is allowed by wholesalers or manufacturers to retailers at fixed price on printed list price or price list. Cash discount is allowed if the customer makes the payment immediately or within a fixed period. When it is allowed, trade discount is allowed on the purchase of specified quantity. 200 units, 500 units, if you are purchasing less than 200 units, you will not get that facility. Or if you are purchasing less than 500 units, you will not get that facility. Cash discount is allowed when the payment is made on or before the given or specified date. What is the object of trade discount? It is allowed to the retailer to enable them to make some profit even if they sell goods at their catalog price. So when the discount are given to the retailers, so they are able to earn profit even if they charge the catalog price. Cash discount objective is to allow and encourage a quick and prompt payment. The recording in the books of account for the trade discount is not done separately, but for the cash discount it is done separately. So when the traders, when they give discount, it is discount allowed, which will be debited, and when the buyers are receiving discount, it will be discount received, which will be on the credit. The trade discount is directly deducted from the invoice, from the cash memo. The cash discount is not deducted from the invoice, but it is on the cash payment. Advantages of trade discount to the retailer. It reduces the cost of purchase, thus increasing the profit margin. So the retailer, when they get trade discount, they are able to buy bulk quantity in less price, increasing their profits. It makes retailers to make some profit even if they sell at their catalog price. So they don't have to higher the price. Even if they sell on the catalog price, they will earn profit. To the wholesalers or manufacturers. It increases sales by encouraging the retailer to make bulk purchases by offering higher rate of discount in order of large quantities. So here they encourage or they attract the retailers to buy in large quantity by offering them discounts, trade discounts, and so the sales increases. A change in the rate of discount may prove to be effective weapon to face competition. So here the trade discount can be a weapon when there are so many manufacturers and wholesalers producing and supplying same type of goods. So this trade discount can prove to be a good competition or effective weapon to face competition. Different prices can be charged from regular customers and occasional customers simply by altering the rate of trade discount. So here there is no need of changing the price or the list price, only the trade discounts can be changed. So the regular customers, like if you are the regular subscriber or we can say subscriber of that goods, or when you are a regular customer of that goods, like you are purchasing that often after every 2 months, you are regular person who orders that goods, or you are the regular retailer who is ordering that goods, will get a different charge of trade discount. And the occasional, like not often, sometimes they order, so they will get a different type of trade discount. Change in the rate of discount is an easy method to make changes in the price without reprinting the catalog. So there is no unnecessary expense, need of unnecessary expense of reprinting the catalog, just only by changing the trade discounts. Depending on the type of customers, you can easily make or offer the trade discounts to the different types of customers without reprinting the catalogs. Advantages of cash discount to the seller. Seller receives the amount within a stipulated time because cash discount is allowed only if the customer makes payment within the specified period. So it is advantage to the seller because seller will receive the amount within the time, within the specified time, because customer, in order to get the advantage of cash discount, will make the payment within that given time. Cash received in time improves the cash inflow of the business and cash may be put to better use. So when cash discount is been given as encouragement, what is the customer doing is making the right time payment. So the cash inflow is better for the business. So it can be used for some better use because cash is timely being received by the business. The possibility of bad debts is minimized. Now what is bad debts? Bad debts is when your customer is not able to pay you money or has not paid you money. So that becomes your bad debts. You are not getting money from the debtors to whom you had sold goods on credit. So this bad debts will become your expense because now you will have to bear from your own side. So here this bad debts is been minimized or reduced because the customer now gets the advantage that if they make a quick payment, they will be demanded with less money. like they are getting cash discount. So it is better than paying, it's better paying than not paying. Prompt payment reduces the clerical work of maintaining of debtors accounts and of sending frequent reminders to debtors. Now who are debtors? We had learned earlier, debtors are the one who purchase goods on credit. So every time the accountant has to give notice to the debtors that this much amount is due, and to maintain the record for all the debtors, it becomes maintaining it becomes quite time taking and difficult. So if there is a prompt or quick payment, so this amount of debtors will reduce and there will be no need of sending frequent reminders to the debtors, the customers who have bought goods on credit. To the buyer. The earlier the buyer pays, the higher he earns the cash discount. Now this cash discount also is done depending on the time period. Like some of the manufacturers or wholesalers can offer that if your cash payment is done within 15 days, you will get 20% cash discount. If it is done within 1 month, then you will get 15% discount. So here the buyer will take the advantage of the 20% discount and will do earlier payment to earn higher cash discount. A buyer who earns higher cash discount can sell the goods to his customer at lower rates. So the buyer here, who is the buyer, the retailer who is receiving the cash discount, can further sell the goods to the customer at lower rates because he or she is earning a higher cash discount. So this can be advantage to the ultimate customers also. Early payment enhances the reputation of goodwill of the buyer. So the seller will be happy to give goods to the buyer who is doing early payment. Now sometimes when the goods are not available in the market, the seller will only be interested to give goods to the buyer who is doing a early payment or prompt payment. So the buyer will not have any difficulty in getting the product because he or she has made a goodwill or reputation in the market by doing a early or a prompt payment. Thank you for watching. Please go through this video carefully, and whenever we do the trade discount journal and the cash discount journal, this is how we will be doing the journal entry. Thank you so much. Have a good day.